The low interest rates engineered by the Fed to stimulate the economy have cost savers and fixed income investors mightily. In 2000, it wasn't too difficult to find a bank CD paying 5% or maybe even higher. That would mean $5,000 a year in interest income to the holder of a $100,000 CD. Today, you've got to search hard for a CD that pays even 1%. The search for yield is driving many to venture out to places where the ice is rather thin. Many bonds can no longer be considered a safe alternative as Fed-promised hikes in interest rates would devalue the principal invested in those bonds. Others are turning to dividend-paying stocks, and yet the stock market is hardly without risks, and the prices of dividend-paying stocks have been driven up over the last few years. So what opportunities might be available to the risk-averse, income-seeking, older, retired person? First, if you are older, and I'm talking retirement age or older, then let your age work for you. If you'd be happy getting 5% on a CD, you might be able to achieve the same outcome using less money because of your age. Insurance companies issue guaranteed income annuities, which are age-based contracts that allow you to put up money up front, and they in turn guarantee you a set amount of income per month for the rest of your life. Now, the older you are, the less money it takes to guarantee a lifetime of income. That's because the company doesn't anticipate paying the benefit for as long. For example, an 88-year-old man could get $5,000 worth of income, the same as the $100,000 CD paying 5%, by putting up half that much, between $45,000 and $50,000, depending on the insurance company chosen. In the case of the rates I reviewed, the $5,000 annual income would be guaranteed to be paid to you no matter how long you live, and it would pay to a combination of you and your heirs for at least 10 years if you died within the first 10 years of taking out the contract. So you or your heirs at least get the money back. But once the payments stop, you do not get your initial contribution back. So what to do with the other half of your money? For many senior adults, the costs associated with long-term care are downright scary. So that same person might want to check into a suite of insurance products that's growing in popularity, an accelerated benefit life insurance policy. This might be available by putting up a lump sum, as in the part of your money that you didn't use to purchase the guaranteed income annuity, or by making regular payments. Either way, the policy would actually allow the prepayment of a death benefit for certain chronic illness situations, such as might be triggered by the need for long-term care. Both of these insurance options, a guaranteed income annuity or an accelerated benefit life insurance policy, are complicated products, and they require expert advice. They are not for everyone. You got to qualify with decent health, and there's an age limit for those who can apply. So work with a licensed professional who is not simply peddling policies, but is coordinating their product placement with your overall financial plan. Income insecurity has become a hallmark of our times, and it has hit older retirees especially hard. Wouldn't it be nice if things worked out so that your age would actually be part of your solution? Offering you wisdom on wealth, I'm Byron Moore. Hi, this is Byron. Thanks for listening to the podcast. If you like what you've heard today, why don't you forward this podcast to someone that you think might also benefit from listening? Also, you can access more podcasts and columns, blog posts, and videos on my website, www.ruston.argentadvisors.com. That's Ruston, R-U-S-T-O-N, .argentadvisors.com. Go to the Wisdom on Wealth tab and access these resources. If you've got a question for me, then just send me an email at info@argentadvisors.com. And finally, maybe you're someone who wants some help with your financial situation. I only take on a limited number of new clients each year, and I can only help you if you're teachable, and I only want to work with you if you're nice. But if that sounds like you, and you're someone with $500,000 of investable assets or $250,000 in annual household income, and you're looking for help designing a plan to protect and grow and enjoy your wealth, well, then I would invite you to reach out to me. You can send me an email at info@argentadvisors.com. Just type the words preview meeting in the subject line. My office will be in touch with you to make arrangements for a phone call or an online meeting or an in-person meeting, whichever is appropriate in your case. Well, thanks again for listening. See you next time.